Bitcoin just keeps heading higher. The world's top cryptocurrency hit fresh record highs above $106,000 in Asian trade Monday. That defied the predictions of some analysts, who had expected a pullback after it broke through the 100,000 level. It's all about the Donald Trump effect.
Hello, Bitcoiners.
Bitcoin bounced after comments from the president-elect that suggested he could create a US Bitcoin strategic reserve, akin to its existing oil reserves. Late last week, he told CNBC that he would do something great with crypto because he didn't want China taking the lead. When asked if he planned to create a strategic reserve, he said, "Yeah, I think so." It's a move other countries have considered. Earlier this month, Russian President Vladimir Putin questioned whether state reserves needed to be held in foreign currencies and appeared to flag Bitcoin as an option. But skeptics also abound, including Federal Reserve Chair Jerome Powell. He says Bitcoin is volatile and not used for payments or as a store of value, making it no rival to the dollar. Even so, market optimism over crypto knows few limits right now. Bitcoin is up over 50% since Trump's election win, lifted by a bet his administration will be friendly to digital assets. He's appointed crypto advocates to key positions overseeing the sector and running the Securities and Exchange Commission. One analyst told Reuters that markets were in blue sky territory, with all eyes now on the $110,000 level. Stellantis is doing a very swift rethink on strategy after the sudden exit of boss Carlos Tavares. The signs are it's dismantling his legacy and bidding to reset relations with dealers, industry partners, governments and workers. Tavares abruptly resigned on December 1st amid a rift with the board and big shareholders. He had once been fated for lifting profit margins at the world's fourth largest automaker, which owns brands including Fiat, Dodge and Peugeot. But dealers complained that higher prices for mainstream models had driven away customers. By September, the firm was forced to issue a profit warning amid bloated inventories. Now Chairman John Elkann is leading the overhaul, pending the selection of a new CEO. He's a scion of the Agnelli family that founded Fiat and also chairs Ferrari. Stellantis has already rehired a former exec to run Ram, one of its most important brands. Analysts say that's a move to rebuild bridges with dealers and reverse a slide in sales at the pickup truck maker. The company has also rejoined the European car industry lobby group, which Tavares had quit. It's set to work with the body in pressing for relief from the EU's carbon reduction targets. Elkann is also set to meet Italy's industry minister to agree a long-term strategy there. It's thought he may pledge to expand output and protect jobs in the country, in return for government help with the transition to electric vehicles. That could ease tensions with Rome. Investors are warming to the moves. Stellantis shares are up around 18% since Tavares departed, having dropped over 40% since the start of the year.
The European Central Bank will cut interest rates further if inflation keeps easing towards its 2% target. That's according to ECB President Christine Lagarde Monday. She argued restricting economic growth is no longer necessary. The ECB has cut interest rates 4 times already this year, most recently last week.
The Governing Council today decided to lower the 3 key ECB interest rates by 25 basis points.
Investors have bet on even more policy easing next year as inflation worries have largely ended and weak growth is now a bigger concern. Lagarde said in a speech in Lithuania she expects the ECB to lower interest rates further. She added keeping rates at a sufficiently restrictive level was no longer needed. Financial investors expect the ECB to cut rates at each of its next 4 meetings. A key reason policy could ease so quickly is because the last remnants of high inflation are ending. That as pressure on service costs come under control and wage growth appears to moderate. Lagarde said inflation could even fall faster than expected amid geopolitical risks. That includes the return of Donald Trump.
I continue to think that restrictions on trade, protectionist measures are not conducive to growth.
Lagarde says if the US takes a protectionist turn, it will likely hit growth in the euro area.
Factory boss Lei Kongrui paces the aisles of his warehouse in China's eastern Jiangsu province, inspecting what he calls erotic clothing. Lei's company Midnight Charm turned over $1 million in sales last year, but now the self-proclaimed lingerie king is worried about the future of his business after hearing about President-elect Donald Trump's plans to raise tariffs on Chinese imports.
North America is our main market, and the US region is still a pretty important segment for us. We hope that we can have a stable space for development in the United States. Of course, if the policy is implemented, we will definitely be affected.
Guangyun County, where Lei set up shop in 2006, is known as China's lingerie capital. Once a sprawling farming community, Lei estimates that now about 1,400 companies and 100,000 workers turn out products here for the lingerie industry. The rapid growth was due in part to a U.S. tariff exemption known as the de minimis rule, under which foreign packages valued at $800 or less are exempt from tariffs, so long as they're shipped to individuals. The de minimis rule has been the secret sauce behind the meteoric rise of the likes of Shein and Temu. Those Chinese e-commerce platforms are now household names in the U.S., and producers like Lei benefit from selling on them. But Biden administration officials have accused Chinese firms of skirting tariffs by abusing the rule, and now they are working to curtail it. Democratic lawmakers want it closed too, calling it a loophole that is being exploited for criminal ends, such as fentanyl trafficking. Similar limits on Chinese imports are being weighed up by the European Union and others. If the trade rule is removed, Nomura forecasts China's export growth to shrink by 1.3 percentage points. Should that happen, Guanyun would be hard hit, and so would Midnight Charm, which relies on the U.S. for 70% of its revenue. Lei is already preparing for the worst.
If the tariff is increased now, our costs will increase and our sales volume will drop. And so our response could be, one, to use other measures to conduct business in the U.S., not only through e-commerce in the US, but maybe with local US business owners as well, or other ways. At the same time, we will look at developing in other regions.
For now, Lei says he's considering investing in US warehouses and switching to a bulk cargo shipping model instead of direct-to-customer shipments by air, which could lower costs. He is also on the prowl for new clients in South America, the Middle East, and Central Asia.